Hi guys, can you hear me? If you can hear me, just put a 1 in the chat box. Oh, okay, great. Hi Giselle, how are you? Thank you, Sarah. Hey Rhonda, how are you? It's been a while. Now don't forget guys to click on the handouts tab. I have some handouts that I uploaded for you guys. So just some FYI information and information that will help you a little bit in your business. I'm doing good, Rhonda. I'm doing great. Thank you. Trying to hang in there. Okay, so I'm going to go ahead and get started so I can respect your time today. So as you can see, today's webinar is I'm going to be talking about the PPP loan and the new guidance they have for independent contractors and self-employed individuals. Now, I want to make this as interactive as possible because I know I've been receiving tons and tons and tons of questions about the PPP loan. And so I don't want to spend a whole lot of time just, regurgitating all of the information that's out there. I'd like to spend more time actually answering your questions. But before I do that, there are certain things that I want to sort of make clear because one of the main questions that I've been receiving is about how to, well, in addition to when am I going to get the money, it's how to actually calculate the loan, which it's really different depending on the type of business entity that you are. So I'm going to talk about that. Now, as for when you're going to get the money, well, yesterday, the Congress actually signed a new law, or not a new law, they signed a new package into place, and Trump is supposed to sign it today. Now, one of the main issues with the initial round of the PPP loan was that a lot of the larger businesses were gobbling up the loans. So a lot of the banks were really focusing mainly on businesses that they had a business relationship with. And normally those types of businesses were, even though they're considered small businesses because they have less than 500 employees in any one location, the issue with that was they were still public companies. And because they had these relationships with the banks, they were the ones that were getting all of the money. And it left people like us, small businesses, people like you, out of the equation. So that was a huge, huge problem. And you have several of these companies, like I think Shake Shack, and I heard today one of the steak companies, I forget what the name is, they're giving their $10 million back because they know that, they didn't necessarily have to get that money. They just got it because it was there. So one of the provisions that was put into place for this current package was that in order for you to get the loan, you have got to sign saying that you are in need of the money. In other words, that you have to have some sort of validation stating, hey, Bianca, how are you? Wow, it's been a long time. Oh, Ruth Chris, there you go. Thanks, Rhonda. Ruth Chris said that they were going to be giving back the $10 million $10 million as well. So in order for them to try to mitigate this fact, what they did was they said, okay, for this round, we are going to make sure that everyone who applies for the loan signs some sort of affidavit stating that they need the money. And what this does is that, in other words, they need the money and they have no other way of raising money to help them through these times. So what that does is it sort of eliminates public companies that are able to actually sell shares in their business. So in doing this, we are hoping that this time around that the money is going to actually get into the hands of the people that truly need it, which are the small businesses like yourselves, booth renters, independent contractors, salon owners. Even though I'm talking about salon owners with no employees, but you have salon owners that do have employees that are small and they need the money as well. So hopefully we're able to we are able to get the money into the hands of the people that truly need it. In addition to that, one other issue that I've been finding with my clients. Okay, someone says there's no sound. If you can hear me, can you just put a 1 in the box? Corin, okay, so, all right, Corin, it might be on your end because everybody else seems to be able to hear me. Okay, Bianca can hear me, Sarah can hear me. So check your computers just to make sure that it's not on your end. But anyway, another huge issue that I've found with my clients is that my clients that bank with Bank of America, they bank with Wells Fargo, all the larger banks, they're having a really hard time getting the money because those banks are the ones that were doling this money out to the larger small businesses, so to speak. But I have had some clients that have found luck by going to smaller banks, even though they are not, they don't bank with those smaller banks, but they have found a lot more luck going to smaller banks, community banks. And I have a few clients that have gotten a loan by doing so. I have a few clients that initially applied with their banks and couldn't get it. And therefore, and I always say the first place to go is with your bank. However, if that doesn't work out, then I say go to a smaller bank because the smaller banks are more about the community versus with the larger banks are more about big business. Okay, so that's one thing to keep in mind. Also, if you've heard of Fundera is spelled Fundera. I think that's what it is. They're an online company that loans money to small businesses. I heard, now don't hold me to this, but I did hear somebody from Fundera saying that they are also part of, or rather the SBA has approved Fundera to be part of the PPP loan, the PPP loan. So therefore you can actually go through Fundera and apply. Now, Fundera, like I said, normally deals with really small businesses. So people like me and like yourselves, we're the type of people Fundera deals with. So therefore, we are not just, we're not just, they're not going to just brush us aside. They'll actually pay attention to your application. So it's more likely your application will go through with someone like Fundera or a small bank. In addition to that, if any of you have QuickBooks Online, they are also part of the PPP. SBA has also approved QuickBooks Online to offer PPP loans, or rather for you to be able to apply for the PPP loan through them. Now, the only caveat to that is you have to have, in addition to having an account with them, I think you also have to have payroll. Initially, I didn't think that was the case, but then when I spoke to someone I'm into it, because I'm in communication with them, somebody has said to me that you needed to be on payroll, but I'm not really sure. So what I would do is I would go ahead and maybe contact someone in Intuit just to see what the rules and the regulations are for applying with Intuit. So those are some of the advice I have when it comes to actually trying to get some of this money. And I would say Trump is signing the law today. So therefore, you want to hurry up and do it. Try to get your application in as soon as possible. Now, one of the major things about filling out this application is knowing how to fill it out and knowing what they're looking for. This way, you're able to fill out the application and get the process going. What I've been experiencing with some of my clients who went ahead and started filling it out, they didn't contact me first, they just filled it out. They've been going back and forth with the banks, requesting additional information. So if you can try to get everything you need to them as soon as possible, so they can actually start to process your application, that would really be great. And before I continue, I think Rhonda had said, can you get both? Oh, Rhonda, when you say can you get both, are you talking about getting the PPP and the economic disaster loan? Just clarify that for me, please. Okay, so on today's webinar, I'm going to be focusing mostly on booth renters, independent contractors, and self-employed owners with no employees. Okay, Rhonda, yeah, the answer to that question is yes, you can get both. However, you have to make sure that if you do get both the payroll protection plan and the economic disaster, in order for them to forgive, because with the economic disaster loan, there is a portion that they will forgive. That portion is considered to be a grant. and they will forgive it as long as you don't use that portion of forgiveness to pay for the same items that you paid for with the payroll protection plan loan. Okay, that's the difference. So part of the EDIL is forgivable, but it's only that part that is up to $10,000. Now, when this whole thing first started, they were saying that if you apply for the EDIL loan, that you can get $10,000 for a $10,000 forgivable grant. Well, in all actuality, it's not really $10,000, and they weren't really clear when they said that. So they came out, I think it was a week and a half ago, with some clarification, and the clarification was that you can get up to $10,000, and I think it was $1,000 per employee that you have. So it's not necessarily the entire 10. You'll get up to $10,000, and that portion, yes, is forgivable. All right, so let's move on to the next. All right, so, oh, that's my information. All right, so the first thing is, who is eligible for the loan? So basically, if you've been in operation since February 15th, 2020, you are eligible. So even if you started your business, because I have some people that started their business in January of this year, and they want to know, well, since I just started, am I eligible? And the answer is yes, you're eligible as long as you started your business by February 15th of this year. The only difference is the way that they are going to calculate your loan. That's the only difference. Other than that, yes, you're eligible. Now, another thing is, in order for you to actually get this loan, you have to have filed your 1040 Schedule C. And the reason why I'm focusing mainly on the independent contractors, booth renters, and salon owners with no employees is because in most instances, you normally file a 1040 Schedule C. So you're normally a single member LLC, or you're just a regular sole proprietor and you're not an LLC. So in order for you to be able to calculate your loan, you have to have filed your 2019 1040. Now, let me say that again. You don't have to have filed it with the IRS. You have to have at least prepared it. Because in order for the bank to be able to calculate your loan, there's a number that they're going to need that is on that 1040 Schedule C. So for those of you that have not yet filed prepared your 2019 tax returns, you want to make sure that you do that as soon as possible. And what they're looking for is they're looking for the net income on your Schedule C. So how much you receive is going to be based upon your net income, basically. Now, if you made $0 or if you had a loss in 2019, then you're not eligible for the PPP loan. So then I would say don't even bother applying because you're not going to get the loan if you made no money. Okay. So any questions before I continue? Okay, so will you not get the loan if you didn't file? Yes, so the question is, if you didn't file for 2019, does that mean that you won't get the loan? The answer to that question is yes, Bianca. You have to have prepared your 2019 tax return, because that is what they're going to use to calculate how much of a loan you're going to get. Okay, and I'm going to show you how they do the actual calculations. So another thing is, if you make more than $100,000, you have to. They're going to reduce when they start calculating your loan. They're going to reduce it to $100,000. So in other words, the calculation can only be between $1 and $100,000. Anything above $100,000, they're going to cut off. And that's not part of the calculation, because really what it is, the more money you make, the more of a loan you're going to get. Okay, so that's why they're cutting it off. Let's see another. I put my application to the SBA loan 3 weeks ago. SBA sent me an email, said that bank will contact me, but I never heard from them at all, nor my bank. No, don't apply again necessarily. So this is so when you say you put it in with the SBA, are you talking about the payroll protection plan? Because if you are actually applying for the PPP loan, you go through your bank. You don't go through the SBA. The only time you go through the SBA is if you are applying for the economic disaster loan. You apply through the SBA, but when it comes to the PPP loan, you have to apply through your bank. Okay, so you're saying in the PPP. So I don't know if you said you put your application in through the SBA, but if you did, you want to go and apply directly with the bank. So then you would have to apply again through your bank. Don't apply through the SBA because they don't handle. The money comes from them, but you have to apply through the bank. Whereas with the economic disaster loan, you have to apply directly with the SBA in order to get that money. Okay. Okay, so Rhonda says, I got my EDL today and applied 4 weeks ago. Okay, Rhonda, so I'm going to ask you offline later on how much you received. I don't want you to put your business out there right now, but I'm just curious to see how much you received. Rhonda, did you apply for the PPP? Okay, Bianca said she also got one. Okay, good. So Rhonda and Bianca, so you're talking about, okay, so Bianca is EIDL, so she got her EIDL. Rhonda said no. I guess, Rhonda, does that mean no, you didn't apply for the PPP? So people are getting it. It's just taking longer than normal because initially they said, example, with the EDL, at first they said, when you apply for the EDIL, that you're going to get, if you apply for the grants, if you request the grant portion, you were supposed to get it within 3 days of applying, but that never occurred. Okay, people were wondering, well, where's my money? Where's my money? So then I started wondering, okay, do they mean 3 days after applying or 3 days after you have been approved? I wasn't sure, but but either way, people, it's starting to come in now. People are actually starting to get the money. And also keep in mind with the EIDL loan, they will pull your credit with that one. Okay. The PPP loan is not based on credit. That's just based on need. That is strictly based on payroll and strictly based on net income if you are a sole proprietor or you're a small business owner. The EIDL loan is based on, they do include credit. So they do pull your credit. The only difference is all of the other stipulations when it comes to the EIDL loan have been removed because of COVID-19, but they will still pull your credit. Okay. All right. So now, how do they calculate the loan for Schedule C filers? So what they do is they multiply your average monthly net profit by 2.5. So here's an example. Let's say, for example, on line 31 of your Schedule C, so you're going to make sure you want to look at your Schedule C, line 31, and see how much what the net income says, okay? So what you do is you're going to divide what's on line 31, Schedule C, by 12. For example, if the amount on line 31, which is your net profit, is $100,000, your loan amount is going to be $20,833. Okay. And how they get that is they take the $100,000 or they take whatever is on line 31, divide that by 12, and then multiply it by 2.5. And that is your loan amount. That's how your loan is calculated. Okay. All right. So what is required for the PPP loan? What documentations do they need? Before I go into that, let me see if there are any questions. Okay, so I went to another bank and was told because I don't have a business account with them, I could not apply. Yeah, Nicole, that is an issue with some banks. They are turning people away. However, I would say try to go to a smaller community bank. Or I don't know if you were on here when I said that Fundera is also has also been approved by the SBA to start accepting PPP loan applications. So Fundera is another option. You can try going through Fundera. And I mentioned earlier that if you have a QuickBooks Online account, you can also try to apply through Intuit because they are also they've also been approved by the SBA. So yeah, some of these banks are denying you if you don't have an account. They definitely are doing that, but don't give up. Just keep on trying. Keep trying the smaller banks to see if they're willing to take you on, especially now with this second round, because with this second round, the lens is going to be on these banks. Okay. They're going to have a microscope on them because they want to make sure that people like you are actually getting this money, because technically speaking, this money is really for people like you. It really is. Because small businesses cannot survive. We have no way of surviving. We can't just say, oh, let's sell some shares for our business. We can't do that. So if we don't get this money, we're pretty much done. Whereas these larger small businesses, they have other ways. So now, because this was a huge issue during the first round, at this time, there's a lens on these banks. So now is the time to take advantage of that and try to hit up all the small banks you possibly can. And what's really difficult is that you can't really contact anyone to even ask if you can apply. But if you can contact someone either by chat online or by calling them, I suggest you do so. Okay. And then let's see. All right, so I applied for the PPP and I was waiting because they said they would be more money. I have a very small bank. Okay, yes, Sharon, there is going to be more money. There is definitely more money coming through. Trump should be signing it today, so we'll see how that goes. And then let's see, Corin says, I applied for EDIL on April 3rd and the PPP on April 6th. Okay, so Corin, I would say on April 6th, I think the money had either run out or was about to run out. But now with the second round, hopefully your application should be, they should take your application into consideration. Okay, so Corin says he's waiting, I don't know if that's a male or female, I'm sorry. You're waiting for your loan number, okay. Okay, Bianca, how can I prepare my 2019 Schedule C in time to take advantage? Okay, Bianca, so in order for you to prepare your Schedule C, you're going to have to prepare your entire tax return. That's the only way that you can actually see that number on Schedule C. So, that's about the only way to do that. And I don't really know. I think last year, I want to say, I know I did your taxes last year. So, just contact me after this. Just send me an email and we'll talk about it. I'll see if I can help you out there, okay? All right. Corin would like to know the same thing Bianca wants to know, okay? So maybe I need to put on another webinar showing you guys how to use QuickBooks Self-Employed to get this information quickly. But either way, you still have to file your return. So that's the only thing. So for those of you that are wondering, okay, let me ask you, Bianca and for Corin, do you have your 2019 financial statements? Because that's going to make it so much easier to get your taxes done. If you don't have your 2019 financial statements or you don't have your income and expenses already prepared, then that's going to take even more time to get your tax return done. Now, if you have that already, your return can be done within a day. So that's the main thing. Okay. Oh, someone said Square has been approved. Okay, perfect. I didn't even know that. So if Square has been approved, now a lot of us in the beauty industry use Square. So you have a relationship with them. So I would suggest contacting Square to see if you can actually apply through them. Okay, then Square is also saying they've been approved. Okay, someone else is saying the same thing about Square, but are waiting for government approval to allocate the funds. Okay, yes, Sarah. So what they're probably doing is waiting for Trump to finish signing this bill so they can now start to disperse the funds. Okay, obviously funds got used up before they were given allowance, the last round. Yep, exactly. And here's what happened, Sarah. What happened was because of the way the banks behaved the first time, they behaved badly, okay, by giving the money to people that didn't have as much need as small businesses. What has happened is the SBA has now approved smaller entities like Square, like Fundera, like Intuit, because these Square, Fundera, Intuit, they deal with people like us. They deal with the small businesses. So therefore, we are their customer. So it's going to be a lot easier for us to get the money because we are their customer. When it comes to the bank, think about it. I bank with Chase. I also bank with Bank of America. My little bit of money with them, I might have a couple $1,000s in the account. Okay, I'm applying for a PPP loan, and then you have somebody like Ruth Chris that has a gazillion dollars in the bank. Who do you think they're going to pay attention to? Not me with my little couple thousand. They're going to pay attention to Ruth Chris because they have millions of dollars. So that's the reason why. So I kind of understand where they're coming from, but still, it's not necessarily the fairest thing. But I think by allowing the smaller companies like Square and like Intuit and like Fundera to actually be able to be part of this process, it brings us into the whole game. So yeah. Okay, let's see. Any more questions? Okay, what if I have bad credit? Will I still be approved? Okay, so if you're asking me about if you have bad credit as it relates to the PPP, that doesn't matter. It's not credit driven. It's strictly driven by your payroll costs, or in your instance, it's purely based upon what your 1040 Schedule C line 31 says. That is how it's calculated. Okay, if you're talking about the EDIL loan, then that is credit based. However, I don't know what score they're looking at. So when you say bad credit, that could be relative. Okay, bad credit to someone might be 600, but what if the loan is based on having a credit score of maybe 550? So then I don't know. It depends upon what their criteria is, and that much I don't know. Okay, one more question before I move on. It says, I got married last year and we are going to file 2019. Will we both need to have a CPA prepare our 2019 taxes in order to have the Schedule C info? Okay, so the Schedule C has got to be prepared. Now, if you're married and you filed jointly, then yes, both of you have got to prepare your return. If you're married and you file separate, then no, only you have to prepare your return. So just keep that in mind, okay? All right, so let's see. What's required for the PPL loan documentation? So the 2019 Form 1040 Schedule C is required regardless of whether or not a 2019 tax return was filed with the IRS. So keep that in mind. You don't have to have filed it with the IRS as of yet, but it does have to be prepared in order for them to calculate your actual loan amount, okay? Also, they're looking for your 2019 1099 miscellaneous showing non-employee compensation received in box 7. So let me kind of explain that, because for our industry, that's a bit tricky. Because number one, if you are a regular salon owner or a booth renter, you're more than likely not going to have a 1099. So this particular item, you don't have to worry about. Now, on the other hand, if you work in a commission salon, and this is one area that people have been getting really confused about, when they're trying to calculate their payroll costs, the question is, should I include what I pay my commission stylist as part of my calculation? Well, the answer to that question is it depends. Technically speaking, if you are a commission salon, by law, your workers are supposed to be W-2 employees. However, I know in this business, because I was a salon owner and a stylist for 20 years, so I get it. And I didn't abide by the rules either because I didn't know. And even if I did know, I'm also wondering, would I have done the right thing? Because I'm not going to sit up here and preach like, oh yeah, I would have been so perfect, because I honestly don't know if I would have done the right thing. But I'm just letting you know, just FYI, for your information. If it's a commission salon, you should be paying them as a W-2 employee. So if you are a commission salon and you were paying them as W-2 employees, then yes, that calculation is going to be part of your calculation costs. On the other hand, if you are a commission stylist and your salon was just paying you cash or paying you however, not taking any taxes out, and at the end of the year, they are supposed to give you a 1099 miscellaneous. So you're the type of person who would have to show your 1099 miscellaneous together with your Schedule C, because you work in a commission salon, you receive the 1099 miscellaneous, and therefore you would need to provide that. But for those of you that don't receive miscellaneous 1099 miscellaneous, because you are a salon owner or a booth renter or you're a mobile stylist and you just work for yourself, you collect the cash through Square or whoever you get it from, then don't worry about it. What they'll be looking at is the Schedule C. And they may ask you a question as to whether or not you received the 1099 miscellaneous. You will say no. And they may even ask you if you received the 1099, I forget what it is, 1099, I forget the name of it, but because I barely use those, but the ones that Square gives you, basically, any third party will normally give you a 1099, if I remember the name, I'll let you know. They may ask for that, so you may have to show that 1099K. Thank you, Corinne. I had a brain fart. The 1099K that Square would normally provide to you, They may ask for that. So I would say have it ready just in case. But as far as I know right now, they're only looking for the 1099 miscellaneous. Okay. Now, here's another thing. They also want to see invoices, bank statements, or bookkeeping records that establish self-employment status. Okay, so the reason why they want to see this is because anybody can fill out a tax return and say, here's what I made. Okay, now before they changed the requirements a couple of weeks ago, because as you know, this is like an ongoing change. They're constantly changing things. So everything I'm telling you today, don't be surprised if I come back on again next week and tell you something totally different, because they're constantly changing things. But prior to them requesting your Schedule C, they were willing to just accept your profit and loss statement. But the problem is, with the profit and loss statement, you could put anything on there. They don't know if it's true or not. You could be lying. They don't know. You can make up some invoices. They don't know if that's true or not. So basically, and they know that most people are not going to make up numbers on their tax return, because if you make up that you made more than you really made, you're going to have to pay more taxes. So they know that people aren't going to do that. And that's the reason why they said, okay, we're no longer just going to accept the bank statements and the invoices and the bookkeeping records. We want to also include the Schedule C, so we can do some kind of comparison to make sure that this person is being truthful and honest about how much money they made. So now, are they going to want to see all the invoices, bank statements, and bookkeeping records? I don't think so. They're going to want to see a combination. So, for example, if you show your Schedule C, they may say, okay, we want to see some bank statements so we can do a comparison to make sure that you actually made what you say you made, or we can at least try to get some sort of range to make sure that you're close. Bookkeeping records, which is your profit and loss statement, they want to see, well, what do your books say? Are your books similar to your Schedule C? Now, keep in mind, your bookkeeping records, your bank statement, and your invoices are never going to be the same as what's on Schedule C. Never. There's always going to be a difference. But we as accountants, what I do is I can reconcile the two. I can reconcile what's on your Schedule C to what's on your bookkeeping records and come up with the same number. And that will tell me if the information is correct. So I'm thinking that they're going to do some sort of reconciliation to see how close they get, just to make sure the numbers aren't too far off, okay? And with invoices, they figure with invoices, you provide your clients with invoices, right? So when in our business, that's not the case. So as hairstylists, they may not ask us for invoices, because we don't necessarily give our clients invoices. We may have sales receipts when we check out, using our checkout system, our POS system. We have sales receipts that are part of our information inside of our POS system. So that might be something they may want to look at instead of invoices, because we will have sales receipts. Or they may say bank statements plus the Schedule C is fine. And they may also say the bookkeeping records and the Schedule C is fine. The one constant in this is the Schedule C. They want to see the Schedule C. And then all the other stuff, they'll make a decision as to what they want to see, I guess, based upon however you fill out your application form, okay? Now, another thing, okay, another caveat to this is something they also just added, is applicants are also required to provide 2020 invoices, bank statements, and bookkeeping records to establish that you were in business in 2020. So they want to make sure that not only do you have your 2019 information, okay, they also want to make sure that you were actually in business in 2020 before you get this loan. So for those of you that don't have, your bank statements together for 2020, or your invoices, or in our case, I would say sales receipts, or your bookkeeping records, which is your profit and loss statement, you might want to think about getting that together now, because they're going to want to also see that. And even if they don't want to see it now before you apply, they may want to see it when it's time to forgive the loan. Okay. Now, for those of you that applied before the second round came out, they may not necessarily, they may or may not come back and ask you for this information. I have a few clients where they did do that. They came back and asked them for their Schedule C and asked them for a couple other items that they did not submit, the first time around. So it just depends on the bank. All banks are different. So I'm just giving you the general information that you need in terms of what your bank is going to request. It could be a bit different, but this is the foundation for what it is that they are looking for. Okay. Now, this is the perfect opportunity for those of you that do not maintain your books. This is the perfect opportunity for you to think about doing that. Okay. It's really important because, as you can see, generally speaking, you can get away without it. But when something happens like this, you realize there's a couple of things you realize. Number one, why it's important for you to keep up with your taxes and pay your taxes, or rather prepare your tax returns. Number two, why it's important to make sure you have a bookkeeping system. And number three, why the type of entity that you choose. And for those of you that just joined, if you click on handouts, I have some information about different entity types. The type of entity you choose is so important. I always try to make this, a staple whenever I'm in front of beauty industry professionals. I make it a staple. When you pick an entity type, understand why you're picking it and understand what the requirements are, because everything that we're doing right now, all of the requirements, the way you're getting paid, the information that the IRS, or rather that the banks want to see, how they're calculating your payroll costs, all of it is based upon the type of business entity that you are. Are you self-employed? Are you a single member LLC? Are you a partnership? Are you a C corporation? Are you an S corporation? All of it depends on what type of entity you are. That's the first thing that the banks need to know. And then once they know that, they can then ask for the necessary documentations. And that's with anything. Whenever you're applying for anything, they want to know what type of business entity are you, because that is how everything that follows after that is going to be based upon your entity type. Okay, that's really important. Okay, so let me see if there are any questions before I move on. Okay, so please do a webinar on QuickBooks. I keep very detailed records of everything. I just need a program to insert all the info in. Okay, well, yeah, I have some news about what I'm going to be doing with the beauty industry professional as it relates to bookkeeping and all of that. So I have some really exciting news coming up. And my focus for what I'll be doing, I'm focusing on people on like the booth renter, the small salon owner, because I know that when it comes to cost, CPAs can be expensive. And I know that sometimes I try not to be too expensive, but, everybody has to eat, right? So it is what it is. But in dealing with a lot of beauty industry professionals, I realized that, okay, a lot of you want to do right, but you may not necessarily be able to afford to do what you're supposed to do. And in addition to that, dealing with a person like myself, who has been in the industry forever, I was, like I said, I owned a hair salon, I was a hairstylist, all for 20 years, I understand the industry. So you want to deal with someone that knows the industry, and that way everything that you do is going to be from that perspective. So I do have some news coming up about something that I'll be doing, and it's really exciting for me anyway. So, but I'll let you guys know when I'm ready to get started with that. Okay. All right. So use of the loan proceeds by self-employed individuals. So how can you use these loans and what are they for, basically? Okay. So for the PPP loan, it can be used for 4 things. Owner's compensation based upon your 2019 1040 Schedule C, line 31, net profit amount. So once again, when they're looking to forgive this loan, they're going to look at that 1040 Schedule C, line 31. So they're going to look at that and they're going to determine if you used the money for compensation to yourself and how much you paid yourself. Okay. Another thing that you can use a loan for is mortgage interest costs, rent, utilities. Okay. Now these expenses must have been, they must have been part of your, okay, this is a typo on my end. I didn't mean to say 2016 Form Schedule C. I think it was late at night. So I flipped the 9 into a 6. That's supposed to be 2019. So sorry about that. So basically your mortgage interest costs, your rent, utilities, and also these payments have to be on your 2019 Form Schedule C. Now, when I say mortgage interest costs, I'm talking about if you own the building. So if you own the building and you pay mortgage, okay, the entire amount is not forgivable. It's only the interest that you pay that is forgivable. Okay, when it comes to rent, it's going to be your rent if you own a salon. So the rent that you pay to your landlord. Now, people have been asking me, okay, I'm a booth renter and I pay rent to my landlord. Is that forgivable? Well, because our industry is a little bit different, okay? When they put the word in rent, the assumption is that you actually own or not own, but you are renting a space, okay? The way we do business is we're renting a space inside of a salon. So technically speaking, that part of it should be forgivable because you're paying rent. In order for the salon owner to pay rent to their landlord, they need the rent from you. Okay, so it's like a trickle-down effect. So yes, I see that the booth rental that you pay is part of what's forgiven. Okay, utilities would be for the salon owner who is paying electric, gas, and phone and all of that. And but one caveat is you have to make sure that all of these costs that you are paying with the PPL loan is something that is shown up, that is something that shows up on your 2019 return, which it should. And if your booth rent is not showing up on your tax return, then that's a whole different story and a whole different set of problems, because that means that you're paying tax on more than you should be. So I seriously doubt people are doing that. But yeah, just keep in mind that whatever you're trying to, if you're trying to spend the loan proceeds on anything, it all has to show up on your Schedule C, with the exception of your owner's compensation, because that never shows up on Schedule C. Okay. All right. Someone said, what about a suite? Well, yeah, suite is rent. So as long as you're paying somebody rent to be there, because what they're trying to do is they're trying to make sure that people don't lose their business. So if you are a suite renter, or if you pay rent for a building, if you don't pay your suite rent or your building rent, what happens? You lose your business. If you are a booth renter, okay, someone said the sound cut out. If you can hear me, put a 1 in the chat box. If you can hear me, put a 1 in the chat box. Okay. Okay, so everyone seems to be able to hear me. So Bianca, oh, she can hear me now. Okay, cool. All right. So what was I saying? Oh yeah, so the key is that they don't want you to lose your business. So even as a booth renter, if you don't pay your rent, what's going to happen? You're going to get kicked out. That means you've lost your business. So any kind of rent that you pay is part of what you can actually use the loan for. Okay. Let's see, let me answer a couple questions before I continue. Someone said, sound cut out. Okay, so can we use PPP loan money to pay ourselves for the lost income we missed? No, Sarah, not for the lost income that you missed. Okay, wait a minute. Lost income we missed will be out of work, or is it to pay us for the time is given received? So what this money is for is not for the, so it is for lost income. Yes, you could say that, because think about it. When you file your tax return and you do your profit and loss statement on your tax return, that includes all of your income, minus your expenses, equals your net income. So that's income that you would have ordinarily received. Okay. So they are determining how much money that you would have made that you didn't make because of COVID-19, and they're replacing that. Okay. Oh, that makes sense. My husband and I own a unit in business condo, still paying mortgage. My business rents a room and another stylist rent another room. We can't charge her for 2 months because of COVID-19. So my husband and I personally, we lost 2 months. We lost 2 months of rent, but our business didn't lose. I'm not quite sure what you're asking, but personally, we lost nearly $5,000. what do I do? I'm not quite sure what you're asking me, but if you can try to rephrase that in a way, because I don't quite understand what your question is. So try to rephrase that, or if you can just email me, Miko, just email me that question, and I will try to answer it offline. Okay. All right. So let's see. All right. So how much will you be forgiven? So you've gotten this money from the SBA or from the government. You spent the money. Now you want to know how much will you be forgiven? Is it the entire amount that you borrowed, the entire 100%? Will they forgive you 50%? How much are they going to forgive? Okay, so it's forgiven. So your owner's compensation replacement based on your 2019 Schedule C line 31 net profit amount calculation. So here is how much they're going to forgive as it relates to your compensation, as it relates to you paying yourself. Okay, now keep in mind that what they're forgiving, or the money that you're getting for the PPP is supposed to last you for 8 weeks. So the calculation is based on 8 weeks. The assumption was that hopefully in 8 weeks, COVID-19 would be under some sort of control, and now you can go back to work. Now we're seeing that that's not necessarily going to be the case. Now in places like Georgia, where I live, the governor has opened up. He opened up and said, if you're a salon owner, stylist, whatever, barber, you can go back to work. Well, whether or not that's a good idea is a totally different conversation. But so in that case, how do you handle that? It's been less than 8 weeks that we were shut down. But anyway, technically speaking, this loan is for 8 weeks. It's supposed to last you for 8 weeks. So the question is, how much would you be forgiven? The way it's calculated is a little bit different from the payroll costs if you have employees. For those of us that are independent contractors who are Schedule C filers, they're going to forgive 8 weeks worth of income based on your 2019 return. Okay, so what it is, for example, let's say that you had $100,000 in 2019. Okay, that's how much you made in 2019. Your net income based upon your Schedule C line 31 was $100,000 in 2019. The maximum amount of forgiveness for owner compensation replacement is going to be $15,385. That's the most that they're going to forgive. And how they calculate that is they take the $100,000 that you made, they divide it by the number of weeks in a year, which is 52, and they multiply that by 8. So you're paying yourself. So in an 8-week time period, you would have paid yourself $15,385. So that is an amount that they're going to forgive when it comes to your owner's compensation, how much you paid yourself. Okay. Now, mortgage interest costs, they're going to forgive, and they're going to forgive that. Anything you pay for rent or utilities, they'll forgive that. And like I said earlier, they would also have to be part of your Schedule C. Now, let's see. One other thing is, Now, what is the required forgiveness documentation? And let me say this. Let me go back one slide. So remember, when we were doing the initial calculation of how much you're going to receive if your net income was $100,000, if your income is $100,000, remember you're going to receive about $20,833. That's how much you're going to receive as a loan. Okay, so out of that $20,833, you can spend $15,385 on paying yourself, and the balance, which is about, I don't have a calculator. Oh, yes, I do. The balance of, let's see, you have 20,000, I think it's 833 minus the 15,385. You're going to be left with about $5,400, something like that. That is what you have left over to pay your rent, utilities, and your mortgage interest if you have a mortgage interest for 8 weeks. So that additional money is supposed to last you for 8 weeks. Now, it may or may not be enough. It's probably, depending upon how much your rent is and how much your utilities are, it may or may not be enough. But that's what you have left to actually pay your, I don't know if that amount is correct. If someone has a calculator, if you can just go ahead and 20,833 minus the 15,385. See what you get. Whatever that is, that's what you have left to pay all the other expenses. And another thing is you have to use this money within 8 weeks. So let's assume that you use this money and you stretched it out to 10 weeks. Whatever you used, okay, that's what I got, Corin, 5,448. Okay, so that's what you have left over to actually pay your mortgage and everything else. Now, if you stretch this money out, let's say you're saying, okay, you know what, I'm trying to stay, I want to, stay out of work longer. I'm going to stretch this money out to 10 weeks. Whatever you spent after the 8-week period, so you have 8 weeks, all that's going to be forgiven. Whatever you spent in week 9 and 10 is not going to be forgiven. So that's how it stands right now. But once again, like I said, this thing is like an ever-changing, it's ever-changing. So that might change. But for right now, that's how it is. Okay. So you have to make sure that you spend the money within 8 weeks. Now, keep in mind that because of the interest rate on this loan is 1%. You don't have to start paying the loan back until I think it's a year after. It's either 6 months or a year. I don't remember, but I think it's no less than 6 months, but up to a year is when you have to start paying it back at 1%. So even if you use the money for something outside of what you're supposed to use it for, think about it. You're only paying 1%. So don't get hung up on, I want to make sure that I don't have to pay any of this back, especially if you truly need the money for something else in order for you to survive, or if you have to stretch it out a bit longer in order for you to meet your goal, whatever your goal is. That's okay, because you're only going to be paying 1% on the loan, on that portion. So just keep that in mind. But if you're a person that doesn't want to pay back a dime, you want to just make sure that this money is free money. You want to make sure you spend it within the 8-week time frame. Okay. Let me answer another question before I move on. My question on that is it 8 weeks from the date of the loan disbursement or 8 weeks from mandated shutdown? Okay, so I don't think it's for mandated shutdown, because you think about it, the mandated shutdown was, I don't know how many weeks ago, maybe 4-5 weeks ago. So that will give you only an additional 3 weeks to spend the money. I think it's 8 weeks from disbursement. So if you receive the money on April 1st, the assumption is that you will spend it. You have the month of April and the month of May. So by June 1st, you should have spent the entire amount. So that's the assumption. Okay, so let's see. So the required forgiveness documentations. So what do you have to show? So after all this is said and done, you received your money, life has come back to normal, so to speak, whatever normal is. We don't know what normal is anymore. The question now is, it's time for you to start paying back. No, we're not paying back the loan, but it's time for the loan to be forgiven. What do you have to show? What documentations do you have to show in order for this loan to be forgiven? Okay, so if you have employees, now, even though this particular webinar is not really focusing on salons with employees, but I bring it up for a reason. If you have employees, you must provide your 941 payroll tax return and forms showing your state's unemployment insurance payments. The reason why I bring this up is because for those of you that have been asking me, if I have a commissioned stylist, can I include her as part of my employee payroll costs when I'm calculating my PPPL loan? And I say the answer to that question is no, because when it's time for forgiveness, one of the things that they're going to want to see is your 941. Your 941 only has information that you paid your employees. So it has wage information. It doesn't have any commission information. So if you pay your employees commission, that never shows up on the 941 ever. Okay. So when they look at that 941, when they're calculating your forgiveness, they're basing it upon what's on that 941, and your commission stylist pay is not going to be on there. Okay. So that's another reason. That's another caveat to why you cannot use your commission stylist to calculate your payroll costs if you have employees. Okay. Another thing they're going to want to see is evidence of business rent. So for those of you that pay booth rent, make sure you're receiving a sales receipt from from the salon owner. Also, hopefully, for those of you that are paying booth rent, I'm hoping that you guys have a contract that states that you are a booth renter, a contractor that shows the separation between you and the salon. And it should, and I'm not an attorney, so I'm not giving you advice as it relates to a contract, but some of the things that I think it should specify is your rent. How much are you paying? Because we don't know whether or not they're going to want to see a contract showing that you're a booth renter and this is what you pay. But at the very least, make sure you have your receipts showing that, yeah, you paid rent. Keep track of those. If you pay mortgage on a building, they're going to want to see your business mortgage interest payments and your business utilities. So this is for salon owners who have an actual standing business. They're going to want to see your utilities. They want to see all this information for an 8-week period. Okay, because that's what they're forgiving. If you paid anything outside of that, they don't care. It has to be for an 8-week period. Okay. Now, this one is interesting to me. It says your Schedule C will be used to determine the amount of net profit allocated to you for the 8-week covered period. Okay. Now, if you have employees in the business, okay, let's say you have a business with employees, they're going to want to see your 941s. If you're a Schedule C, they're going to want to see your schedule. I mean, if you are an independent contractor or you are a Schedule C filer, they're going to want to see your Schedule C. Now, the reason why this one is interesting to me is because as Schedule C filers, what we pay, or rather I won't say pay ourselves, but the money that we make never shows up on the Schedule C. You don't see a deduction there. The only thing you're going to see is what the net income is. So the reason why they probably want to see your Schedule C in order for them to forgive the loan is they're going to take this amount, what they see on your Schedule C, they're going to take the amount and they're going to compare it to what you paid yourself. And here's the reason why they do that. Because I get the question all the time. People say to me, I'm a Schedule C or I am an independent contractor. How much should I pay myself? How should I report my payroll? I'm trying to get a loan. How should I report? And let's say the person who is giving you the loan wants to see your income. The question I get is, well, what should I show them? How do I pay myself? Well, here's the thing. If you are a Schedule C filer, nobody cares how much you technically pay yourself. So you can have a system saying, okay, I'm going to pay myself $500 every single week. I'm going to write myself a check every week for $500. So in my eyes, my payroll to myself is $2,000 a month. So if somebody should ask me, how much do you pay yourself, or what is your payroll, or how much do you make, you will say $2,000 a month, which is not correct because they never base it on how much you pay yourself. And here is why. Think about this. As a Schedule C filer, let's assume that you had a really, really bad year. And at the end of it all, when you looked at your 1040 Schedule C, line 31, which is your net income or loss, you only made $2,000 because it was a terrible a year. And that's all you made, $2,000. However, somehow you were still able to write yourself a check every single week for $500. So which means that you still drew out $500 a week from your bank. However, that's $2,000 a month, which means that you paid yourself $24,000 that month. Okay, I mean that year. But your Schedule C only shows that you made $2,000. So in all actuality, you didn't necessarily pay yourself your income. So your income wasn't $24,000, because that extra money that you paid would mean that you may have had really good cash flow, which means that in the prior years or prior months, you made so much money in the prior periods, you made so much money that you had all this money sitting in your account. Even though you had a really, really bad year and you made only $2,000, you were still able to pay yourself $24,000 that year because you had extra money in the bank. That extra money, you already paid tax on it. You paid tax on that extra money the year that you made it. Okay, so therefore, that is not income for the year that you only made $2,000. So that's the reason why when the question comes, how much was your income? You're a sole proprietor. What was your income for 2019? Never ever look at how much you paid yourself. Look at what your Schedule C line 31 says. That is what your net income is. That is what you pay tax on. And that's it. So for them to want to look at your Schedule C tells me that they're going to compare what you paid yourself in that 8-week period to what you actually brought in 2019. They're going to do the calculation and they're going to determine, okay, so you brought in this amount of money and what you paid yourself was not more than what you brought in. So it was either equal to what you brought in, and therefore that means that we will forgive that. We'll forgive that amount. So hopefully that makes sense to you, because I was wondering, well, why do they want to look at Schedule C when it doesn't really matter, because what you paid yourself isn't really on here. So really, they're just doing a reconciliation of what you say you pay yourself and what you actually made. Okay. All right. So, that's it. Nothing else. That's all I have. So let's see if there are any questions in the chat box. Okay, my question on that is 8 weeks from. Okay, I think I already answered that. Oh, you're welcome, Corinne. Not a problem. Let's see. And Mihoko BT, hopefully I'm pronouncing your name correctly. If you can just send me your question via email so I can answer it better, because. All right, so I think that's it. So if there are no more questions, I am going to log out. Oh, I am in Georgia. I'm in Georgia, where they opened up the city today. So you're welcome, Bianca. You're welcome, Sarah. You're welcome, Mihoko. Hey, Rhonda. You're welcome, Rhonda. So what I'm going to do is, so you guys will receive, you may receive this recording. I'm not sure. You may. If you do, don't think I'm bugging you. It's just the system does certain things automatically. And then I'm going to reach out to some of you again when I've created this thing that I was telling you about, that I'm going to be using to try to help small salons, booth renters, and all of that. I have a program coming out that I think you guys will really, really enjoy. And I really, really implore you to take advantage of what it is that I'm offering, because it's going to be a really sweet deal. Okay, so Lakia, let me know what you have for the beauty. Okay, Rhonda, I sure will. All right, so if there are no other questions, I am going to sign off. And I want to thank all of you for taking the time to be with me, because I know you could have been doing other things. Rhonda, when are you opening up? Okay. Oh, one other thing I need to mention. I'm sorry, before I leave. Make sure that for those of you that are receiving money, okay, the PPP loan, you want to make sure you are recording. You're keeping track of exactly what you're spending. So whether it's in a spreadsheet, however you're going to do it, keep track of it, because you want to know exactly how much you spent and on what, because they're going to want to get this information from you. So you don't want to just hand them pieces of paper. You want to hand them something that looks professional, okay? And that way you know exactly what it is that you spend, because you want to keep track of what you're spending too. You have to keep track of what you're spending, because if you don't know your numbers, you don't know your business. Okay. So you need to know your numbers. Okay. All right. So May 15th or the 1st. Okay. But just be careful for those of you that are opening up, before there is a vaccine. All I can say is just be really, really careful. I know you don't have a choice. You got to make your money. And I know they have all these different rules and regulations, 6 feet away and masks and all that. But I'm a paranoid person. I'm just thinking, okay, it's in the air. So no matter what happens, somehow I can't be protected from it. But the more that you do, the less your chances are of, I guess, maybe contacting it. But let me say you this, don't do what Donald Trump said you should do. He said you should inject yourself with Lysol and also stick a, I don't know, some sort of, is it UV ray lighting inside you to kill the virus? Please don't do that. Okay, please. Actually, Lysol came out with a tweet and they said, please do not ingest Lysol. Okay. So don't listen to the president when it comes to that. Don't drink Lysol because that's not going to do it. Okay. All right, guys. It was really nice talking to you. And I will see you on the other side. Okay. Take care.